Hello and welcome to another update video about gold. Yeah, we've seen a further downtrend decline for gold, which was pretty much in line with our forecast here. I presented you a few different scenarios in the last videos, but two of them pointed to the downside. I still have the wave counts on the chart and highlighted to you that the direct pathway to the upside is not the favorite yet. Okay, is not the favorite yet. I still showed it to you. I will take it out now. But for everybody who's new on the channel, before we dive into what is currently the most probable pathway for the market to take, let's talk about quickly just the bigger picture, because I just wanted to make sure that everybody's on the same page and everybody understands that at least my perspective here is that we are in a bullish market, that gold bottomed in October, November, 22. In a wave 4, we're now in a wave 5, and this is itself a 5-wave pattern. 1, 2, 3, and then we should also get a 4 and 5. We're basically now in the third wave. I've labeled it as ABC structures because as we are in a 5th wave, we can consider the possibility of an ending diagonal. An ending diagonal isn't bearish, it just means it's a structure that's already getting exhausted, and basically, well, it becomes very apparent if we look at the structure. I mean, the move up initially in this wave 1 looks like a 3-wave move. You can count this as 5 waves if you want to, but it would look strange. This move up here definitely looks as if this was an A wave in 3 waves. And we might now be in this B wave, and then another C wave should follow. So typically in these ending diagonals, or not typically, but it has to be the case, all of the 5 waves are corrective structures, so typically ABC structures, which is why I've labeled this as an ABC. Here, wave A to the upside, which likely topped here in December. B wave down is likely now unfolding, that's been the perspective anyway, and then the C wave up should still follow. So I'll still see a bullish year for the metals, especially gold here. I will have to move that across here, but anyway. What we're looking for now is how this corrective structure is likely unfolding. I have to say, with corrective structures, it's usually best to adopt a wait and see approach, not trying to predict every market movement, but to understand where the relevant support levels are and the resistance levels, breakout points, invalidation points. At the moment, the idea was that this B wave is still coming down lower. So A wave topped in December, B wave is unfolding now. There were a couple of ways how I could see this unfold. In the first scenario, I shared with you an A wave down initially into the December lows, here around $1,988. A B wave to the upside in 3 waves. And we could now be in the C wave down, which is a 5-wave move. Wave 1, wave 2, wave 3, wave 4, wave 5. Still possible, one of the favorite scenarios. The other scenario was possibly as a triangle. This is invalidated now because it should have been then a contracting triangle. Still technically possible, but I have no evidence anymore for a triangle, especially with that break to the downside. So I'm going to take that out. However, I think I would like to still modify, even though the white count is sort of being followed. So the idea was still for us to go lower, but still respect the yellow support area, okay? So the yellow support area that you see there on the chart is defined between, well, the next support level is 1981, 1943, and 1889. So we should really stay above 1889, or I would have to revise the larger assumption on the chart. I think at the moment it's just filling in a little bit more of that B wave pullback. But let's talk about a more likely structure, because this doesn't really look like an ABC anymore, unless the C wave is an ending diagonal. Bit of a, yeah, not so probable count. Another thing or scenario that I'm thinking about, especially the way this looks now, is that we're actually dealing with a WXY pattern. Again, that doesn't really have much practical relevance, or it's in any way different to what I communicated before. Just the subdivisions are likely looking a little bit different. What I have to do just to change the wave degrees here slightly. Yep. And then we came down in a W, moved up in the X wave, and we're now in the Y wave. And then this would be an A wave down, the move that bottomed around the 25th of January. B wave rally, yeah, and now we could be in the C wave, especially the move down below this A wave low of $2,005 would suggest we are now in the C wave. That means we don't need to drop much lower. The previous count that I showed you suggested many more swing lows to come. But I think, you know, it's not, we are already in the support area, spent quite a bit of time there. Let's see. I mean, it's anyway the case that until we see a 5-wave move up above resistance, we cannot confirm a low in place. But I think this is the area to watch for a bottom. But then if this is a C wave now, this here was likely wave 1 of C, wave 2, wave 3 is likely still unfolding, then a 4 and a 5, and it doesn't need many more lows, just maybe 1 or 2 more lows. And based on that wave count, we can also add some targets. So we can measure the length of the A wave, go to the high of the B wave, and the 100% extension is relevant, pointing towards 1991. Of course, there are other extensions like the 1.236. That's at 1969, but let's see if it reacts to 1991. Looking at the wave count, it should still go a little lower, maybe to 1969 or 1957. Another way of measuring is to take the length of the wave W. We go to the high of the X wave, and then we get just slightly different. Yeah, we get some confluence down there at around 1938. That would actually work out quite well, also by looking at the microstructures and how many more lows are actually ideal. So you see actually that there is, first of all, the golden ratio level, 61.8 retracement at 1943. 1938 is one of the extensions, and 1936. So there is some confluence down there. Also, it still looks like the third wave of the C wave needs to finish. Then another 4, 5. Yeah, it could drive us down into that region. So at the moment, anyway, no low is confirmed, but this is the area I'm looking for a reversal. Yeah, there's absolutely no evidence it started now. And it takes a break above the 2047 level, the last swing high, to at least have a first indication that something more bullish is unfolding, or actually, well, I am bullish on gold at the moment still. But, you know, that the uptrend has started, basically. I mean, that's what we're watching for. But for now, short-term downtrend still unfolding, especially against the last swing high at around $2,047. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.